What's going on?
How we doing? How we doing?
Not bad. So it's me and you today. No Patrick.
No Patrick, Straza, and the Spencer Show.
All right. Taking over the chart report.
Yeah, at least until Pat is back. How was your weekend? All good?
It was good. Played some golf, hung out. Starting to get hotter down here. It's hotter out there on the course. Summer's coming. Unlike you guys up there, you get excited for summer. I get bummed out because it means the end of the good weather, not the beginning of it.
Shawnee!
You're not alone, boys. Shawnee's here.
There he is.
All right. Why don't we just start? What's on everyone's radar? I got some stuff on my radar, but what are you guys watching today?
So Apple's market cap is officially larger than the Russell 2000.
I saw that. That's crazy.
Yeah, that's crazy.
It's like a sexy juicy stat, but it's kind of just math. Of course it is, and Microsoft will be soon too. The Russell 2000 market cap, can't get larger as easily as the market cap of one company can get larger, right? Especially when it's of that size. So I think the other day, Apple announced a $90 billion share buyback. We were talking about it. That's already larger than every company in the Russell 2000. So we're just talking about different things here. I don't think it's a great comparison, but it does just speak to the absolute monstrosity that this company has become, and really all these tech companies. So it is really cool. I remember when there was no $1 trillion market cap company. It was only a couple of years back.
You know what's weird? Every quarter when Apple reports, they're always talking about, if you just just look at iPad revenue, it's equal to, 2 Chipotles or whatever. But I've never had a stat hit me like this one, that Apple alone is worth more than the entire Russell 2000. To me, that just hits different in a good way. But
I mean, it's crazy, right? So that's 2,000 stocks that we're talking about. It is wild to think. But once you look at, if you look at a list of the largest companies by market cap, even other companies in the S&P 500, just dwindle in size to the Microsoft and Apples of the world.
Well, part of the reason why that's happening, guys, it's not the obvious things. Of course, their hardware devices are great, right? Like the iPads and the MacBooks and the iPhones. Everyone knows that. That's great. But I've noticed recently, I was just kind of going through my family budgeting, and it stood out to me that, man, my credit card statement has a lot of little charges with Apple's name on it, like things for Apple TV, and HBO subscriptions, and other subscriptions, and they all funnel through Apple's, and they're getting a little chunk of that transaction every time. It's pretty remarkable how much they've kind of worked into at least my family's life.
Services have become so huge for them, and really that was all Tim Cook's doing. A lot of times we talk about, what's going to happen when Buffett goes away, or what happened when Steve Jobs went away. I remember 10 years ago when Apple was trading for 10 times earnings at net cash, and Icon was an activist in it. Everybody was worried. Cook was saying this. Look at our services business, right? We're so pervasive in people's lives now. Now we're going to monetize that, and people used to laugh at him.
Yeah, I mean, just think of stupid things that they're not stupid, but I mean, little things that they're charging for that I pay for. I pay them $9.99 a month for 2 terabytes of storage. Easy business for them, and they probably have hundreds of thousands, if not millions, of customers paying them that every month. It's crazy.
I got $2.99 here, $5.99 there. I don't even know what the hell it's for.
Yeah. And by the way, I say all that. And I'm not complaining. I feel like
happy to pay them.
Right. The services and benefits I get from Apple, the company, I feel far outweigh every cost that I pay for them.
Okay, so let's take that thought one step further. I love this. I was on Spaces last week, having this discussion with some other folks. Apple Bank. Is there any company or any brand, especially with what's going on in the last 2 months, is there anybody you would rather have your money with?
I've got an Apple credit card.
Dude. Now, you're going to get 5% interest now from Apple? I mean, I would imagine that product is going to be very popular.
Yeah. I have an Apple credit card, although full disclosure, I never use it. I only use it when I buy Apple products because you get like 5% cash back or something crazy.
I'm getting one because I'm opening the Apple Bank thing, and I think they make you get one.
All right.
So,
Let me
no,
know.
I think that's super cool. I mean, I know that like they're banked by Goldman, so it's really like not going to be much different. But they're going to have their reputation on the line for depositors. So I think if you're worried about regional banks, you can go bank with Apple now. The other thing too is I never thought I would get an Apple Watch. I think I need one.
Dude, I have one. It's a game changer.
Okay, yeah, a lot of people like it. It's a golf thing too. All the apps connect to it, like follows you around. You don't want a cell phone in your pocket while you're out there.
Dude, as you know, I recently bought a new car, and my
Yeah.
Apple Watch is my fucking key to my car.
Oh, that's cool. Really? So like, oh man, I'll bet only Tesla is doing stuff that cool. So yeah, though.
Speaking of Apple, just looking at the daily chart, what a tight range it's been in. What, since earnings or whatever? Yeah, since earnings.
Yeah.
Well, that
A
could
lot of
be
these high and tight things.
that's true of everything. I mean, look at the S&P over the last 3 weeks. It's just tightening and tightening and tightening. I tweeted this morning about how from coils come springs, and I did a little chart of SPY, and I feel like we're going to have a big move. I don't know which direction. It could go either direction, but I feel like we got a big move coming soon.
When you get corrective action through time instead of price, it typically speaks to the underlying strength of the trend. And that's what you're seeing in the indexes right now.
So your bet is the spring is going to spring higher once we come out of the coil.
Right.
Okay.
Mm-hmm.
All right. I always like keeping tabs. 4 times a year, we get 13F day, the deadline for all the 13F filings, 45 days from the end of the quarter. Warren Buffett is kind of the only guy that can still has the power to move stocks with his filings. And you're seeing that again today because the stocks that he sold last quarter are down today. And stocks that he bought last quarter are up today. So that right there, that's the power of Buffett.
So you're saying that on the heels of the 13F announcement, which he filed last night, these stocks are moving because he is. All right, so let's talk about let's unpack this. You said he's the only one who really moves things based on 13F filings. Like, why is that?
Yeah, I didn't used to be the case, right? I can think back to maybe 5 or so years ago. The filings from Einhorn and Soros and Druckenmiller, all these guys, David Tepper, they had influence, but it just seems like in the last few years, it's not really a thing anymore. And Warren Buffett, because so many people follow him and want to invest like him, that he's the only one that seems to have any. And we all know that these trades were made months ago. In some cases, it's possible that these trades were made, like 5 months ago, right? But he's the man. Like, what can I say? So people, he has such a cold following. The mythos of Buffett is so strong. So when he comes out, 45 days after the end of the quarter and says, "Oh yeah, by the way, last quarter we sold all of our restoration hardware stock, RH," people pay note of that. The stock is down almost 8% today.
Well,
and at the lows.
But they should, right? Because this is the type of institutional name that you want to get behind because they'll accumulate over time. Go look at that chart of Oxy that we're always sharing that shows all the purchases at the same level. So these institutions can literally become support when they're accumulating, right? So you do want to know, and that's why the market does react. And then just to discuss why these 13F filings, and I'll take the other side of you a little bit. I agree with 99% of what you're saying. Outside of, listen, Ackman and Einhorn and Icon, when they put on a big bet and announce it, you'll see some moves. It's not, you're right, it's not as much as we used to see, But I think a lot of that has to do with the fact that these long-term value guys are there's a far shorter list of them today than there was, say, 10 years ago.
Yeah, yeah.
These value shops it's been tough for them, right? So a lot of these guys, they're in and out. Steve Cohen's 13F filings, no one is going to look at. Paul Tudor Jones, these guys are some of the best investors of all time, but it's 45 days late. It doesn't matter. So you need somebody who just, by definition of the kind of investor they are, plan to hold for, you want like at least a year.
Right. And people know that Buffett is not day trading these stocks. So
exactly.
Right.
And his positions are typically far larger than anyone else's. So there's like materiality and significance there too, in a sense that he can and will support price in a more noticeable way.
Sure. And maybe that's why, because of his reputation as a buy and hold investor, maybe that's why his sells are down more than his buys are up today, right? Because when he sells, it means more than when he buys. Because selling is counterintuitive, right? To buy and hold investor.
Great point too. So let's talk about some of his moves. First of all, I want to throw out, because I know we do talk about Oxy on here a lot, so I know people are involved in that stock that are listening. He did make some comments, I believe, at the shareholder meeting that maybe he won't be buying much more, and he's not looking to take over complete ownership. So he does have FERC approval for I think 50%, and he's only about 30, but he hasn't come out and bought down here in this little Buffett zone around $60, where he's bought pretty much every other time over trailing 14 months. So, but let's talk about some of his other moves from 13Fs. Like what's
all right. So I mentioned Restoration Hardware RH. He exited that position entirely. So he sold all of his RH stock. He exited Bank of New York Mellon. He exited Taiwan Semiconductor.
All right, hold on. That's really interesting. So he's out of Boney.
Yeah.
Wow. So let's look at how they're doing. That's ticker symbol BK. How big was his stake?
Oh, good question.
I could check. All right, so that's interesting because I was talking with somebody the other day, and they made a great point. They said, every other crisis we've had, I think he said in his career, Buffett's out here bargain hunting in the banks. We definitely saw it during the financial crisis, right? Some big moves, some profitable warrants. He's not touching these things. In fact, he's a net seller of banks, it sounds like.
Well, that's what's interesting, right?
Because maybe he's bought in the last 45 days.
But so hold that thought though, because he initiated a new stake in Capital One.
Ooh,
and he added to his stakes in Bank America and Citi.
Okay. All right. So he's going for the big guy. Wow. So wants Bank of America and Citi, but not Bank of New York Mellon, which is one of those fancy, I think, wealthier banks, big East Coast presence, but it's definitely, I would think, a regional.
So Bank of New York Mellon and U.S. Bancorp, right? I would say two of the. I don't know if U.S. Bancorp is quite a regional bank. Maybe it is. Maybe it isn't.
Yeah, it is. Sure.
All right.
One of the big ones.
He's out of the regionals and he's into the nationals.
Yep. Totally. All right. Interesting. So, yeah. I mean, that's what you're hearing, right? That's been the narrative. That the big banks are actually only going to benefit from this, while the regionals continue to suffer. We'll see. I would say, continue to say that the price action, the big banks, is nothing but bearish as well. So.
And then his only other new position was Diageo. So I guess he likes the liquor space and spirit space.
I mean, these kinds of names have been red hot. A lot of these staples companies. He's got a ton of exposure to staples. This is kind of like his bread and butter, so that one doesn't surprise me one bit.
Wasn't he a seller of Chevron as well? He didn't exit, but he trimmed, right?
Yes. He trimmed Chevron. He trimmed a bunch actually. He trimmed Amazon, Chevron, Ally Financial, Activision Blizzard, which is being bought now by Microsoft. He trimmed McKesson, General Motors. I think that's it.
Wow.
Yeah.
Explains why my Chevron position hasn't been doing well over the last few months.
Hey, these energy stocks are in trouble. I know we've been getting cautious and talking about it a lot, but it looks like these trends are really suffering some serious damage.
Yeah, I mean, from the high level, looking at the XLE sector ETF, it's coming into a pretty key level here. It's trading at 77 and change right now. 76 is the level that if it breaks that, we could be going a lot lower.
Yeah, and the stocks have a lot of catch-up work to do with the futures market, whether it's crude oil, gasoline, heating oil. Don't even talk about nat gas, but there's even more damage there, and we're below the prior cycle highs in pretty much all the energy futures charts. And then for XLE, those prior cycle highs, like that equivalent level, is 78 pretty much, which we are kind of blowing through this week here. So 78 line in the sand for XLE.
Well, we're below it right now.
Yep. So then you could look to like maybe equal weight RYE. That equivalent level would be about 65. We're pretty much there, pretty much on it. So the next couple days are going to be key. If you see some big follow through lower from current levels, throughout the week this week, that'd be a pretty ugly sign, because that would mark a pretty decisive resolution at this key form of resistance level.
You know what other sector industry is not looking great is retail.
So Home Depot had some crap news today.
Yeah. We had retail sales, although I have to admit I didn't look too closely at the numbers. But Home Depot today, Walmart on Thursday, Target tomorrow. But I'm looking at just XRT, right? And it does not. It's sort of it's the opposite of the consumer packaged goods thing, right? They have pricing power, and retailers do not.
Yep. That is one ugly chart. Hold on. Yeah, so all of the retail earnings are coming out this week. This is really like the big retail earnings week. I guess Home Depot.
Yeah, this week and next week. Yeah.
So those pivot lows here in XRT, nice line in the sand. We've seen price react at this level 1, 2, 3, 4, 5, 6 times. So I would watch those pivot lows. If they go, look out for the whole space. And obviously, retail is a crucial sector.
Check out the weekly chart on retail. It's even uglier. Like it looks like it wants to really roll over here.
Yeah, this is one of those big offensive groups that you really do want to see trending well. You don't want to see this thing break the lower bounds. That wouldn't tell you anything bullish about the broader market.
Wow, you know what, guys? Straz, I just pulled up, just for shits and giggles, I pulled up a monthly chart for XRT. And if you look at the monthly chart right now, like, is there any better picture that really describes what happened post-COVID with just, handing out free money to the U.S. customer?
Yeah, it's ridiculous.
Holy cow, that's the picture right there.
Yeah, so what Sean is alluding to, this thing literally quadrupled in 1 year's time. So, and now we've drawn down, almost 50% of that, 40% of that move. So, yeah, it's been a wild ride these past few years, especially for these. And also, this is also it's very archy, right? That's the speculative stuff. There's a lot of growthy stuff in there, these discretionary type stocks. So you'd see something similar from a lot of these more speculative areas, their indexes.
Yeah, so many charts look like this, right? Just so over, like you could have thrown a dart at a board and made money in the second half of 2020 and 21, right? And it was so easy. And now all these charts look the same, right? Not all of them, but a lot of them. Anyway. All right. What else we got here? We got Brian Lund here as well. And
Hey guys.
how we doing?
Good.
Brian.
Hey, so what about those chips? I've been waiting for the chips to wake up and looking at AMD, Applied Materials, NVIDIA, SMH, Soxel. Everything's starting to look a lot better. What do you think, Steve?
I like AMD a lot.
Yeah.
Didn't they just had a nice earnings beat, right?
Yeah. And don't you feel like that sector needs to, get in gear for us to sustain?
100%.
Yeah, right. I mean,
Yeah.
that was the part that was worrying me, is that chips were lagging, but they seem to be perking up a little bit.
Well, here's the thing, like semiconductors are a lot more cyclical than any of their tech peers, right? The other subgroups or industry groups in tech are, have more secular growth trends, while semis growth trends will be more like, industrial stock, right? So it's not surprising that you're seeing that near-term weakness from semis, at least relative weakness compared to other tech stocks. When you look at things like financials, industrials, materials, right? Because other cyclical groups are trending pretty poorly on a tactical basis. So if semis can pick it up, yes, that's something I would look at and say huge positive for the overall market. It seems like they are.
Broadcom's about to make a 52-week high, and
That's one of the better looking ones.
And Micron's looking pretty good too.
I mean, look, you can't get too bearish on this space at all when Nvidia and Broadcom, Avago look the way they do. There's plenty of look at Avago. Wow, plenty of charts that look really great here.
It just seems like every time Nvidia or AMD have like a flush down, it has proven to be a buying opportunity, right?
How about this base in Micron too? A lot of nice bases here. Yeah, MU Micron forming a really nice base. Applied Material.
It's tough though to buy those stocks that don't base. Like I've been watching the home builders, right? And so the home builders keep putting in what would look like a reversal bar, right? And you think, okay, but then it doesn't get confirmed, and they go higher, and then they put another reversal bar. So it's like even though some of these things are up big, it's been hard to get in there because there's not a real clear area to define your risk, Yeah,
you make a good point too. No one candle or bar means anything, right? You need that confirmation or follow through,
right?
And yeah, I mean, you're looking for a bearish formation to form in a bullish trend, so that's also, not always easy.
But seriously, who would have guessed if you had said back in October or November, right? If you said, yeah, home builders are going to be the leaders in 5 to 6 months, people would have laughed you out of the room, right?
Nobody would have guessed that.
And I think one of the takeaways is think back to like October and how like I don't mind people having a bearish opinion or a bullish opinion, but to be so locked into your opinion, right? And there were so many people that like that this is it, we're falling off a cliff. And because they were just stuck in that mindset, they missed out on the run in big tech. They missed out on the run in housing stocks. They just missed out. And it's just a shame that people can't be more flexible in the way they approach the market.
Yeah, I wrote a blog post last week about the home builders because I had a position that I just got out of in Lennar that ticker LEN. It's going to end up being one of the better trades of the year for us, and it's like, and just like you said, Brian, like 6 months ago when I put that trade on, or maybe it was 5 months ago. Like if you would have asked the average person, are home builders a good stock to buy here? Everyone, I mean, 99% of people would say no, terrible. Interest rates are rising, mortgages are rising, houses are overpriced. Like this, they're heading into a recession. Like no, I would not invest there.
Even then, Sean, like technically, it looked extended at the time because nothing else was resolving higher from these bases, and then homies were like skying. And we were like, oh, all right.
And so basically, reiterating what Brian said, I mean, in my blog post, I was basically like, look, you can read the headlines if you want, and you can let them affect your decision making. But at the end of the day, as our friend Brian Shannon always says, only price pays, and that's the only news that matters.
And I think it's hard to underestimate or overestimate, I'm not sure which one, the hangover that people have from 2022, right? Especially younger, newer participants in the market. There is such a recency bias, right? They just went through hell. And I'm not saying we're done. I'm not saying, I mean, the bottom I think is in, but it doesn't have to be. But people just got so traumatized during 2022 that they're just looking for any stutter in the market to be, this is it, right? We're going to roll back over and go down to the lows. And it's hard to the transitions in markets are the hardest spots, right? That's where people lose the most money because they get stuck in the mindset of what just happened and they won't get out of it. I did that in 2009, man. I fought that rally out of 2009 as hard as I could. I tried to short stuff until I finally said, maybe I'm wrong, right? But it's a tough lesson to learn.
Yeah, I'm with you, Brian. I was fighting that rally too in 2010, 2011.
So just keeping on home builders. I mean, we've been watching these stocks because they keep popping up in all of our scans because they've been such a leader, since last year now. One thing that I like to do, I was just looking at the Lennar chart, Sean, as you were talking about it. One thing I like to do, when I'm trying to think of what's the probability of a breakout, right? So in something like Lennar, I'll be looking and thinking, okay, are we going to resolve from this base and actually take out those highs? I could say the same thing about like DR Horton, DHIs, right up here at the upper bounds, testing former highs. Maybe we get a breakout, maybe not. Look at other stocks in the industry group and see what they have done, right? So have they already taken out their equivalent levels? Have they resolved higher from similar patterns? Or are they failing at these, former highs? So two that just popped up, Pulte Homes, PHM, what a nice breakout there just last month, ripping higher. And then BLDR, not exactly a home builder, but buildings and products, or building products and materials, and very similar look. Look at that breakout. And Builders First Source, BLDR. So
Nice.
maybe that's, giving us or tipping the hat to where stock charts like Lennar and DR Horton go from here.
It's a good example too why you never take stocks off your list. Like I like to divide my stocks into two lists: stocks that are ready to break out, and then stocks that are in an active mode. Those are ones that have broken out. Because if you look at Pulte, there's so many opportunities to get in there if you didn't get in the first time, or to add. Even if you had gotten out at some point, let's say, okay, we're overextended, maybe when we were running in like early February, right? But you still keep it on your active list as long as it's above the 50 or the 21 or whatever you use, because those are the stocks. This is the trauma from 2022. We're so used to these stocks making moves and then fail, but in a healthy market, which we'll get to at some point again in my lifetime, you'll get stocks that will trend for weeks and even months, and you get lots of opportunities along the way.
You guys noticed the further breakout in Google today?
Yeah, the stock just won't stop. The relative strength over past week has been incredible.
That new Baird update, I think.
Yeah, look at that relative trend. But the fact that XLK is going too, that base is resolving, I think bodes really well. Communications probably resolves higher from this base this week as well, if Google keeps doing what it's doing, right? So all good things. I was telling Sean last week, I was saying I wish they could all be like this, Brian. What a nice resolution, the key level. So.
They were at one time, and they will be again, Steve.
All right. I think we should wrap it up here. We got a meeting to head into, but as always, if you guys want to get the chart report, you should email Patrick at thechartreport.com. It's his daily note that goes out. It's free, and you should check it out. It's got the best of FinTwit in 1 minute every day in your inbox. Thank you to Brian. Thank you to Sean. Thank you to Steve Straza. And we'll be back next week, I guess.
All right. Bye, guys.
All right. See you.
See ya.